All right, thank you for joining us today as we share about our company, Hiatus Homes, our investment fund, the Hiatus Capital Fund, and the 8-year journey that we've been on to make an impact in U.S. housing.
And what we're going to be talking a lot about housing today and our real estate projects. The ultimate reason you're here is to consider becoming a partner in this business and investing with us, and ultimately, hopefully, earning what we're planning on being some pretty significant investment returns. So we started the fund about 3 years ago. Today it has 6.3 million from over 50 investors, and we are closing it out to new investors on June 30th.
So at Hiatus Homes, we're creating energy efficient small homes that address the U.S. housing crisis. Our homes are typically 500 to 1,300 square feet, and they're net zero energy ready. Our developments focus on being walkable to jobs, coffee shops, and groceries, instead of having to get in your car for every trip. Now, our goal with this fund and our vision for the company is to demonstrate how developers, cities, and investors can work together in a business model that addresses one of the biggest problems we have today, missing middle housing.
So not only is this a mission we feel good about when we wake up every morning, but because there's so much need for small housing in the United States right now, the profits that are generated by solving this, or really anytime a dedicated group can come together and solve a real problem like this, can be outstanding. And this is what we're working toward for both ourselves and for our investors. So as we think about that, we want to ask, how big is this problem? Well, after our first development of 22 cottages, we ended up with a list of thousands of interested buyers that want our homes. We could have sold hundreds of cottage homes, but we didn't have the land, the resources, the funding, or the operations to support it. So in 2020, we formed the Hiatus Capital Fund. Over the last couple of years, we bought 4 parcels of land here in Bend, Oregon. We started design and planning for over 120 small units. And today we're seeking accredited investors into the fund to be able to use that capital and fund the final phases of development. So in return, our investors own a piece of all 4 projects and earn profits from delivering our unique type of housing to the market.
So before we get into the details of missing middle housing and our projects, we want to introduce ourselves, because we all know that in the end of the day, you're investing in the people of Hiatus Homes. So we're a design-focused, nimble team where 3/4 of our staff are designers and architects. We operate very lean on the construction side, utilizing the best skilled trades and labor. But I'll share our story first. So as I said, I'm Jesse Russell. I'm the CEO of Hiatus Homes. And I didn't set out in life to be a real estate developer. I studied journalism at the University of Oregon, which actually led me to being a reality TV producer for 15 years. So during the end of that time, I worked for a network that was producing one of the first shows about tiny houses. Tiny House Nation was the name. So that was my introduction to small homes and minimalist living. I immediately thought about my hometown of Bend, Oregon, and how a neighborhood of tiny homes would be perfect in Bend. I sold everything I had and I moved back to build our very first tiny house. So at the time, I didn't know that zoning building codes didn't allow for these smaller, denser houses on residential lots. It was essentially illegal. So I couldn't believe that. But this really started an important journey for Hiatus Homes. I started building relationships and finding allies at the city for this type of building. So in 2015, Bend approved the first cottage code, and we were finally allowed to build small houses on small lots. And I was the first development builder to use that code to create the Hiatus, which was at the time a 22-unit cottage community, and it received national attention. It made a bunch of my friends and family and investors pretty happy when they got all their money back plus some, and we ended up naming the company after this development. So I'll share more about that later. So throughout the project, we kept trying to make the cottages more and more efficient, and we finally achieved net zero with the last home. Now, this sparked our commitment not just to small homes and good design, but creating the best high-performance houses possible. So today, we build to a net zero ready standard with all electric appliances, hot water circulation system to save water and energy. We use mini splits for efficient heating of the indoor space. We also utilize an ERV system and seal our homes to maximize air quality. If you've ever experienced a wildfire smoke event, you know that indoor air quality is one of the most important aspects of enjoying the life inside your home. So I go on for hours and hours about this, but I'm available, hop on the phone and talk design, high performance homes, building science, walkable neighborhoods. Just reach out.
Thanks, Jesse. And I'm Ryan Andrews, CFO and managing partner for the Hiatus Capital Fund. So if you think of Jesse as kind of the heart of the company, you can think of me as the brain, maybe at least when it comes to the numbers. So I've been doing investment management and accounting for 17 years now. That originally started with me wearing suits and ties at PIMCO, the giant bond manager. And I started there during the global financial crisis. And after PIMCO, I progressed through a couple of different startups, did venture capital. And then in 2014, I was the fourth employee at CrowdStreet. And CrowdStreet is a company that capitalizes real estate projects online. So after CrowdStreet, I managed a series of construction debt funds where I was lending money to builders and developers. And that's when Jesse and I met. So he was trying to figure out how to fund that 22-unit cottage project. And we used to get together. He'd buy me lunch once a month. We'd sit down and talk through whatever the latest hurdle was, and trying to get investors or trying to get debt and how we'd solve it. So I was really watching that project pretty closely. And when I saw how Jesse pulled it off, I was really inspired. People just loved these homes. It was like they were crying when they got their keys. And I was just like, man, there's really something to this business. So at the time, I was managing this institutional construction fund for a big insurance conglomerate. And so I was seeing every type of development and construction financing you can imagine. While I was doing that, I was also kind of on the side working with Jesse to act as a controller for the second project, Roanoke, which is actually the home that we're sitting in. And so when Jesse was getting ready to return the profits to the original friends and family investors on that first project, that's when we started to put our heads together and talk about this business being something bigger. And in 2020, we sent back 1.8 million to the investors, and at the same time, sent them a pitch deck for the new fund, the Hiatus Capital Fund. And when almost all that capital came back, that's what seeded the new fund. And we were like, all right, it's game on. I left the big institutional fund, and we focused full-time on this business. All right, so now that you know who we are, let's talk a little bit about why we're here. Jesse and I weren't like a couple of MBAs that sat around and came up with tiny home development as some business project. We were really pulled into this business by overwhelming demand from customers. But where did these customers come from? It's a story really that we like to tell about demographics, cars, traffic, zoning rules, and baby boomers. And so for the last 85 years, the housing market has been driven by baby boomers. In 1946, the US population was 140 million, and then there were 76 million babies born over the next 18 years. And that's the baby boom. The baby boomers' parents, with widespread access to cars, they really wanted to raise their family in big single family homes with yards. They didn't mind driving to work. There were about 100 million less cars on the road, so they weren't concerned about traffic. It was just a different time.
So home builders responded by creating the suburbs. And as you probably know, the suburbs are neighborhoods. They're all residential with very little commercial, and they're centered around the need for a car. And the homes tend to be really large and really spread out. There are huge problems with these suburbs. They're not walkable. The homes are huge and hard to take care of. And the density of these developments is really, really low.
As the baby boomers formed their own families in the 1970s and 80s, they also preferred this type of housing, but wanted it even bigger. And so the average home size in the US grew and grew, and more suburbs proliferated. At the same time as all that was happening, the demographics of US households began to really shift.
So nuclear families wanting big homes in the suburbs went from the majority of households to only 20% of households today. Now, 80% of US households are made up of singles, couples, unrelated adults, or single parents. And as you can see, these new households are made up of only one or two people. This large section of households has really different tastes in housing. They prefer walkability to retail services, shorter commutes, less yard, less maintenance, less cost than a traditional home in the suburbs. So this has all led to what is referred to as missing middle housing, and this is a crisis. Very little housing for this missing middle has been built in the US over the last 60 years.
But if there's so much demand for what is being called the missing middle type of housing, why hasn't it been built? Well, there's a couple of reasons. The suburbs model of city planning was codified into restrictive zoning rules that encouraged or even forced builders to create sprawl. And that's kind of what Jesse referenced when he first tried to make small homes. It was then further codified by cities as their building codes pushed builders into bigger and bigger homes and made this small footprint, small lot development illegal. And then lastly, just kind of a practical or economic reason, there was so much momentum with this type of development in the US, and we've really been in a seller's market for so long that builders didn't need to change what they were doing. It was risky for developers to try something new, and so they didn't. But what we found out when we did try something new, which was building small homes, there was truly a ton of demand for small housing.
So we created Hiatus Homes to attack and solve all of the housing problems, and we did it by designing a new kind of home. So we specialize in building small homes for mostly the 1 to 2 people households, and typically our homes are between 500 and 1,300 square feet. Now, the built environment generates 40% of the annual CO2 emissions. So that's why our homes are also high performance net zero ready, which helps our residents to move towards a carbon neutral lifestyle. So we've fought to get building codes and zoning changes approved at the state and the local level that allow for smaller, more energy efficient units on infill lots, which means our houses are walkable to restaurants, jobs, and are situated usually right in the heart of the city. We're now supplying the type of housing that is truly needed and wanted by the majority of people.
Before we get into our current projects, let's talk about why everyone is moving to Bend, Oregon, and why the numbers make this an ideal location for pioneering our business model. So Bend, Oregon is an outdoor paradise. It's known for its access to outdoor sports, from skiing at Mount Bachelor to climbing at Smith Rock, or mountain biking Bend's 500 miles of trails. And for a lot of people, trying to do all that in the same day.
So the greater Bend area has added 50,000 residents in the last decade. We saw a huge surge in in-migration during the 2020-2021 when COVID drove households out of the big cities and into small cities and recreational-based communities. You know, Bend saw a lot of people moving here during COVID, and a lot of them were remote workers. So today, Bend has the highest percentage of remote workers in the US at over 12%. But geographic and land use constrained this growth that's necessary to support all these people that are moving to Bend. So these forces have combined to create a housing shortage of at least 3,400 units in Bend right now. Not only is the market eager to absorb as many of the homes as we can build, but we have a city and a state that is very focused on facilitating housing growth without sprawl, the perfect regulatory environment for our business.
And Oregon isn't the only state adapting to the changing needs of housing. And as an investor, if you participate in this business now, we think this will really open the door to us being able to take our business model much bigger in the future. And being a part of this fund for you or for our investors is, hopefully step one to an even bigger opportunity in what's going on in housing.
Okay, so we have 4 projects in the fund, and we're now going to spend about 10 minutes sharing a little bit about each of them. Now, these projects are all in slightly different stages of development and construction. We expect to build through all 4 of the projects sometime in the next 3 to 4 years.
As we share about these projects, remember that as an investor, you can own a piece of all 4 of these projects which total over 120 units. The projects include a diverse set of models from small cottages to lofted apartments to twin home duplexes, and a little bit bigger 2 or 3 bedroom homes. A few of them are higher end luxury oriented, but the majority are targeting a purchase or rental price that is available to the 120% AMI or average median income, which is really a workforce household of 1 to 2 people. All of our development land is owned by the fund free and clear, with debt only taken out for construction. So this is a huge way to mitigate risk because we have the ability to pause development and hold our land and wait. If there's a recession or inflation pushes building costs up, we maintain flexibility. So I know that's what makes our fund unique from other funds where you maybe pick just one project or another project. You, by writing one check, are part of all 4. So currently the fund has 6.3 million of equity from about 50 investors and 2.3 million of construction debt with cash reserves of about 400,000. So the point is we're very conservatively capitalized. All right, let's get into the projects.
Okay, so our first project is Hiatus Roosevelt. And one of the biggest focuses here was creating a best-in-class high-performance home. One of my favorite things about Hiatus Roosevelt is its location. It's right in the heart of Bend, just blocks away from the shopping and restaurants at the Old Mill. Parks and trails along the Deschutes River are great for a walk, paddleboarding. You can even catch a concert at the amphitheater. This infill development is just over a ½ acre and consists of 12 units. Phase 1 includes the largest home that we've built to date at 1,300 square feet with a lofted ADU apartment above the garage that you can use for rental income in the back. Phase 2 homes are smaller 2-bedroom homes that are around 900 square feet and are available for pre-sale right now. So this home expands on everything Hiatus Homes does best, providing intelligent and stylish small-scale design and a high-performance, energy-efficient package. We added a hot water circulation system to save water. We've upgraded the ERV system to optimize indoor air quality, even during wildfire smoke events. So this has greatly reduced the monthly utility expenses. The result is our most efficient home to date.
So phase 1 on this development is under construction right now. We have locked up lot 1. We're under contract to sell it, and we'll be closing on it in the next couple of weeks. So the first home is being purchased and rented out for monthly rental income by the buyer. So he's an investor buyer. Lot 2 is finished, and that is available. So even if you don't live in Bend, if you are looking for a turnkey rental property, kind of outside of a fund investment, we'd be happy to connect on this. It is completed and for sale. And then homes 3 and 4 are under construction, and we're looking to pre-sell those over the summer.
So the second project in the fund is Hiatus Penn. This will be our first of its. This is the first of its kind in Bend. It's a development that combines 40 open lofted 1-bedroom apartments with common areas, co-working space, a gym, and it's just really a one-of-a-kind kind of apartment design. The units are laid out, kind of like how our cottage design is laid out. Each unit is around 500 square feet with a lofted bedroom, has a kitchenette, and then 13-foot ceilings with windows that just flood light into the apartment. The building includes shared kitchen and living room spaces, as well as a gym. There's a conference room. There's plenty of co-working space on each of the floors. So again, we basically took our cottage design and we put it into the form of an apartment.
So for this project, we own the parcel of land that the building's going on. The building permit is now ready. We're working through some of our final hard bids with our general contractor and making some final design and construction decisions. And we believe this will be one of the best projects in the fund because of what's going on in the rental market. So we believe rents on small apartments are about to see a big jump. Right now in the Bend rental market, there is a ton of demand for studio and 1-bedroom rentals, even while some of the larger rentals have softened. Our project is unique because it's one of only 3 projects inside the 15-minute walkable zone around the Bend Central District. So almost everything else that's being built is on the periphery of the town. And we're even hearing anecdotally that because of interest rates, a lot of those larger projects are on pause right now. So we have a big opportunity here to be a first mover to market and take advantage of bringing this project out to the community in Bend.
Okay, so we have two other projects as well. Hiatus 9th is our 9-lot small unit development in Bend's Orchard District. Each lot will have what we're calling a twin house. It consists of a 1-bedroom unit as well as an attached ADU above the garage. This is a unique floor plan, maximizes our density. It provides a lot of flexibility for our buyer. They can live in one unit and rent the other out, or they can rent both units as an investment property. We've received our land use approval from the city and will start construction, at the end of this year with a completion date sometime in 2024.
So on this project, we have practiced really extensive value engineering over the last year, which means we'll be able to bring down the cost of construction on these from some of our previous projects. And so that could mean this is one of the most profitable projects in our whole portfolio. And investors that come in now really get the full benefit of being part of that project. And so we're really excited to share this with everybody.
So our fourth project in the fund is Hiatus South. This is our largest project to date with a total of 30 plus cottage units. This development brings us full circle because it's located just blocks away from our first development, Hiatus Benham. The cottages are 800 square feet and perfectly designed to meet this need for greater affordability. The small spaces have tons of storage and are oriented for functionality and privacy. This welcoming community is all designed to use less square footage of indoor living space and take advantage of the beautiful common areas, which are complete with a community garden, playground, and it's all connected by a 1/4-mile nature trail that winds through these beautiful towering ponderosa pines that are there on the property. We purchased the 3 acres of land this summer and are currently finishing up the initial site plan.
Before we close out on the fund structure, or by sharing on the fund structure, I hope you're saying to yourself, I love these projects, but you might also be wondering what kind of track record we have. Can we deliver returns to investors? So, of course, we wouldn't be where we are if we hadn't delivered to investors in the past. So let's run quickly through 2 previous projects we've exited out of and share just a few of the stats on that.
So as we mentioned, our first development was Hiatus Benham. This development was the first to use the cottage code, as we said, and it was adopted by the city in 2015. It consists of 22 of our 500 square foot lofted 1-bedrooms, which are arranged in these housing clusters, 4 of them. So we originally sold the first houses for $275,000 on average, and today those are selling for over $400,000. We've delivered a 25% annualized IRR to the investors. And I was thrilled because a lot of those investors I knew very, very personally, and they took a chance on this new type of housing. So when they almost doubled their money in a few years, I was really thrilled. So yeah, it was a huge financial success, and the project was really, really well received by the city of Bend. So in Hiatus Benham, the cottages were 50% more efficient than a code-built house. And a couple had solar, and as I said, one of them was net zero. But with our next development, we really wanted to take it to the next level and make every one of the houses net zero ready. So Hiatus Roanoke consists of 10 of our 2-bedroom, 2-bath houses. It's located in Bend in a really desirable West Side neighborhood. And this development features really beautiful views of the mountains through the 2nd-story panoramic full glass doors.
So this development, and actually we're sitting inside a Roanoke home right now. This is Jesse's home. And so, we know this development really well. This sold out immediately, multiple offers on most of the homes. These houses are beautiful. They sold for about $200,000 over their original pro forma forecast price. And this generated amazing returns to investors. This project actually hit a 29% IRR. But that's not all. These developments, both of these 2 developments, generated that mailing list that we talked about of over 2,000 people looking to get into one of our homes. And so we're still getting multiple emails a week of people looking for more of this type of housing. All right. So let's say you want to be part of this company. It's a minimum $50,000 investment. We have incentives for investors that come in at 100,000 or 250,000, and we will group together families or investment clubs to help you all achieve a higher break point if you kind of all come in together. Investors can expect to be in the fund for 3 to 4 years from this point now, and will receive between 4 and 6 total profit distributions. And then at the end, they'll receive back their original capital investment. And so that's typically, kind of 1 to 2 distributions per year over the next couple of years. We can take self-directed IRA retirement money. So let's talk about that if that's something you want to think about. And right now we can only include accredited investors. We can chat about what that means if you're not familiar. And so from a structure standpoint, you are buying a share or a unit of a Delaware LLC that owns our 4 parcels of land and then pays for the design and development and then earns the profits when those projects sell. Our fee structure is very simple. There's a management fee that literally just keeps the lights on. And then we as managers and our team are incentivized to generate returns for you. We only get paid based on how well our homes sell and how profitable these projects are. So we are incentivized to focus on controlling costs, to being efficient, to delivering homes that the market wants. And when we execute on that business plan, we all do well. And so our families do well, our team does well, of course, our investors do. So, thank you for your time today. This is the last major investor raise that we're planning to do in this fund. And so, this is really the last chance to get in. If you are interested, let's get documents out to you and signed before June 30 closing. That's in about a week and a half. So we have time, but let's, we'll kind of move through this. So for the next steps after this webinar, I will email each of you our PPM, our subscription agreement, and the fund's pro forma and financials. And that'll be for you to review and help you make a final decision. So when you get that email, please respond with what we call like a soft commitment, kind of an amount that you are thinking of investing. So we make sure to allocate and make sure we have space for you. And we'll get you a DocuSign package after that for you to click through and sign. And that'll include funding instructions.
Okay, well, it looks like we have time for a couple questions. So go ahead and type your questions into the chat box. We'll see if we can answer some.